Assalamualaikum. So today I will present about operating segment.
Mfrs 8 operating segment is a standard issued by the Malaysian Accounting Standard Board (MASB) in July 2009. It applies to the companies that are publicly traded to issue securities as well as those that voluntarily choose to disclose segment information. The main objective of Mfrs 8 is to increase transparency and relevance in financial reporting by requiring companies to disclose information about each segment performance. An operating segment is defined as a component of an entity that meets the following criteria. First, it may earn revenue and or incur expense from its business activity. Second, whose activities are regularly reviewed by entity chief. Third, the CODM uses this information to assess performance and allocate resources. And fourth, descriptive financial information is available for the component. What is Chief Operating Decision Maker? The Chief Operating Decision Maker, CODM, is the individual or group responsible for overseeing the company's operation. It refers to top-level management such as Chief Executive Officer, CEO, Chief of Officer, COO, or the Board of Directors, BOD. The main responsible is use segment data to guide the company's direction and strategy. It is decide how to distribute company resources and to evaluate the success of operating segment. Here are CODM of Genting Berhad. We have Tan Sri Lim Kok Tai as Executive Chairman and Datuk Sri Tan Hong Han as Chief Executive, President and Executive Director.
Business segment refers to a part of a company that engages in a specific type of business activity or produce a particular product or services. Each business segment operates semi-independent and generates its own revenue and incurs its own expenses. Geographical segment. A geographical segment refers to different regions or countries where a company operates and where the economic environment affects sales and performance. The purpose of a segmentation is to break down a large, complex business into manageable parts. This helps stakeholders understand performance at a more detailed level, support better decision-making, and increase transparency around what's driving success or underperformance. Business segment. Genting Berhad organizes its business in two main ways by what it does and where it does it. First, let's look at the business segments breakdown. The biggest revenue generator, leisure hospitality, bringing in just over 22 million ringgit, led by operation in Malaysia and Singapore. Plantation activities at close to 3 million ringgit, while power and property together contribute a little under 1.5 million. The oil and gas segments rounding out with about 500,000 ringgit. Each area contributes to a best diversified income stream. By breaking the business down this way, we gain a clear picture of which areas are growing and which may need change or improvements. Segmental reporting is a powerful tool in financial analysis. It breaks down a company performance by business line or regions, offering a clear view of where value is created or risk exists. In this slide, we will explore two key benefits: enhance decision-making and improve risk assessments. Segmental reporting helps manager and investor pinpoint what drives performance. For example, they can see whether Malaysia or Singapore contribute more to revenue, or which business line like oil and gas or leisure. It also guides a better capital allocation, with Singapore generating 8.7 million ringgit from 14.7 million in assets. That's a clear productivity. Plus, setting KPIs by segments, not company-wide average, make performance targets smarter and more aligned with real business priorities. Improve risk assessments. Segmental data also improve how company manage risk. For instance, 31% of a Genting total assets are located in Singapore, a single country consideration that flags potential regulatory. Year-on-year shift such as the revenue dip in the US and Bahamas from 6 million to 5.6 million signal market softness. Segment information also show how diversified earnings really are. Oil and gas was in the red now delivered to a positive 0.33 million earning before interest, tax, depreciation and amortization in 2024, while leisure and hospitality still provide the bulk of profit at 7.4 million. Lenders can therefore link cash flow and credit risk to specific segment instead of relying on a group-wide average. In a conclusion, segment reporting brings a clarity to complexity, helping companies like Genting manage growth, mitigate risk, and allocate resources intelligently across business lines and regions.
Interim Financial Reporting. Mfrs 134.
Now let's talk about MFRS 134 Interim Financial Reports. An interim financial report is a financial report containing either a complete set of financial statements or a set of condensed financial statements for an interim period. The purpose of interim reporting is to provide timely financial information for periods shorter than a full financial year. Interim report also help users like shareholders access the financial health of an entity continuously. When preparing these reports, there are two main approaches. First is the integral approach. This approach treats interim periods as part of the annual accounting cycle. So, costs or revenues that span multiple periods may be spread out or adjusted later in the year. Next, the discrete approach, on the other hand, views each interim period as a standalone accounting period. Each quarter is treated like a mini financial year. In terms of recognition and measurement, interim report must follow the same accounting policies use financial statements. That includes recognizing our revenue as expenses when incurred, not when cash is received or paid. And importantly, there's a greater reliance on significant events and transactions that affect an entity's financial position and performance. In Genting Berhad is they encounter a decrease in group revenue and EBITDA in quarter 4 2024. In quarter 4 2024, Genting Berhad recorded a decrease by 5%, dropping from RM 7,267.4 million in quarter 4 2023 to RM 6,881.3 million in quarter 4 2024. Also, the group's adjusted EBITDA for the fourth quarter 2024 of RM 1,679.0 million was lower than the quarter 4 2023 of RM 2,285.4 million. The decrease in revenue and EBITDA was contributed mainly by the leisure and hospitality division, especially Resort World Sentosa in Singapore and Resort World Genting in Malaysia. At Resort World Sentosa in Singapore recorded a lower revenue and EBITDA. This was largely due to a drop in non-gaming revenue, which was affected by seasonal changes, a stronger Singapore dollar, and higher travel costs. Meanwhile, Resort World Genting in Malaysia also recorded a lower revenue and faced higher operating expenses. Another factors that lead to decrease of revenues and EBITDA is the strengthening of the Malaysian ringgit against major currencies, the British pound, US dollar, and Singapore dollar. Since Genting Berhad has significant operation in regions using these currencies, the conversion of their earnings back into ringgit resulted in lower reported figures. This will affect revenue generated in USD and SGD that will convert it to a smaller ringgit amount.
Another significant event impacting Genting Berhad financial position and performance comparing the fourth quarter of 2034 to the corresponding period in 2023 is the notable increase of 35.12% in finance costs. The company's finance cost rose from 379,921,000 in the fourth quarter of 2023 to 530,364,000 in the fourth quarter of 2024. This substantial increment in finance costs show that Genting Berhad faces higher expenses associated with its debt financing and related activities during the latter part of 2024. The factors that could contribute to this upward trend include: first, elevated debt levels, where the company may have increased its borrowing during the financial year to fund their capital expenditure, acquisition, or to support its ongoing operations. Next, currency exchange rate fluctuation. As we know, Genting Berhad operates in various international markets, and it is possible that a portion of its debt is denominated in foreign currencies. The effect of the substantial 35.12% increase in finance costs on Genting Berhad financial statement is significant, where the direct impact of higher finance costs is a marked reduction in the company's profitability. As we see in the income statement, the profit before taxation for the fourth quarter of 2034 is 238,160,000 ringgit, is considerably lower than profit before taxation for the fourth quarter of 2023, which is 865,551,000. Now, I will like to explain about interim reporting period for both the current and comparative interim financial statement of Genting Berhad for fourth quarter. First, statement of profit or loss. The current interim report is from 1st October to 31st December 2024 and comparative interim report is from 1st October to 31st December 2023. Next, statement of financial position. For current interim report is as at 31st December 2024 while comparative interim report is as at 31st December 2023. Next, statement of cash flow. For current interim report from 1st October to 31st December 2024, while comparative interim report is from 1st October to 31st December 2023. And lastly, statement of changes in equity. For current interim report, it is from 1st October to 31st December 2024, while comparative interim report is from 1st October to 31st December
2013.